Welcome to our third episode of the Profit Playbook. I'm your host today, Tracey Metcalfe, and I'm joined by Susi French. Welcome, Susi. Today we're going to look at rewarding staff tax efficiently. So, Susi, let's look into rewarding staff. Many business owners think give the employees a salary increase and that's what they're looking for. But are there other ways we can reward staff?
There are quite a few ways we can look at rewarding staff because quite often just increasing a salary alone will not necessarily motivate your staff. They may get a little bit of a high, they've got a salary increase, it feels good, but actually after a few weeks, not that much has changed. So other things you can think of doing to actually motivate your staff and make them feel that they are getting increased benefits, an option that you could give them is salary sacrifice schemes.
So what is a salary sacrifice scheme? Can you explain what it is, how it works?
Okay, so the idea of salary sacrifice is you give up a portion of your salary and in return for that you get some non-cash benefit of some type. It tends to be tax efficient. You can quite often save both national insurance and income tax. So an example of this that people quite often see would maybe be a pension. So you can sacrifice part of your salary and instead your employer will make a contribution to a pension scheme for you. And this will save, both tax and national insurance on it. And actually, some point at a later date, you receive a higher pension in return for it.
Is there a benefit for the employer as well in that?
I think, again, this is sort of motivational for the staff. They feel they're getting something extra. However, the salary sacrifice element of this is soon to be changed. In the last budget, I think they brought in a £2,000 limit for salary sacrifice for pensions, which will be coming in shortly.
But it's still worth doing that.
You might as well take each little incremental gain is an incremental gain. So if you can get a little bit, every bit helps.
Is there other things you can do under salary sacrifice? You mentioned pensions being the main one, but is there other ones you can do under it?
Probably the other one you hear a lot about is electric vehicles. So with an electric vehicle, what you can do is you sacrifice an element of your salary. You decide on your car, because obviously electric vehicles have low emissions, so people tend to like them. Your employer will go away and pay the rental payments for the car, the lease payments for the car, and you get your car. And they've done that. So at that point, you saved tax and national insurance. However, you get caught back the other side because you have to report under P11D, so benefit in kind to HMRC, and you'll be taxed on the P11D value, so the emissions value of the electric vehicle. However, those tend to be pretty low because the emissions are so low on them, or no emissions. So at the end of the day, you get your car, you save income tax, you save national insurance.
Susi, can you give me an example how a salary sacrifice under pensions work in practice?
So an example of this could be somebody who's a higher rate taxpayer. So we're going to give you the example with higher rate, 40% taxpayer. They decide to sacrifice £10,000 of their salary and instead their employer pays it into a pension. So that's their gross salary. So if they'd been paid that gross salary as a higher rate taxpayer, they would have received £5,800 and £4,200 of tax and national insurance would have been paid. However, by sacrificing the £10,000, the employer pays all of that £10,000 into the pension and there is no tax or national insurance to be paid. So they win with the whole £10,000 into their pension for the future. The only cost to them is the £5,800 that they haven't received, but they have gained in the process £4,200. It's
a win-win situation.
It's got to be a win-win. You've just got to be happy that you're not going to see that money for probably a little while.
Yes, it's a long-term investment.
Yeah, unless you're probably 55 years old and older and can draw down on it.
Yeah. Have you heard about other like they call trivial benefits? Can you explain what some of them are?
So trivial benefits are things that employers are allowed to give away to their employees tax-free. So things like the Christmas party or an annual summer party. So an annual event that a business might have to put on for its employees only. So for that, there's a limit of £150. And that will allow your employees hopefully to have a nice party and hopefully motivate staff as well. Other trivial benefits, one that comes to mind is vouchers. So you're allowed to give £50 vouchers to your employees, and they've got to be vouchers and not cash, at any time in the year, and those will be tax-free. So quite often people or businesses will pick, I don't know, a birthday or Christmas to give their employees a voucher. If you're giving vouchers to directors, there is a limit of 6 vouchers a year of £50, so £300.
I'm going to just check. All of this there's no benefit in kind for it?
Nope. No.
So completely...
Yeah, you just
Lovely
give them to
little
your
gift.
staff and that's it.
Here at Green & Co, we really value work-life balance. So how can employers implement this for their employees?
So here at Green & Co, we have a mixture of both flexible and hybrid working. So the hybrid working is simply whether you're in the office or you're working from home, or in some of our cases also, obviously we go out and see clients. So we have a complete mishmash of all three. The flexible working is the idea that you have core hours, and how you fit your hours in around that to a certain extent is up to you as an employee. So this really gives people the chance to fit things in with their own lives as well as getting their work done. And this seems to be a really good motivational tool. It doesn't actually cost anything. You may need to give your staff the ability, I don't know, screens or keyboards and like a mouse so they can work at home and check they have the right facilities. But apart from that, that's probably the main cost. And actually it motivates staff because they can fit in whether it's family or hobbies or lifestyle around work in a much better way.
Definitely. And one of the other things Green & Co does as well is provide medical insurance for the employees. So is that something else we can look at?
Again, yes, having private medical and wellbeing type benefits, although there is a P11D benefit on this, it is fairly small, and the ability it has to get help from private medical staff outside of the NHS is really helpful. I had an injury recently. I had a rehab through our private medical. It fitted around work. I didn't have to worry about, was the appointment going to be at an unfortunate time for me when I might be out at a client. I could just fit it in where it worked for me. So it worked brilliantly. And it keeps you fit and healthy. And again, it's another motivational tool for staff.
And I think in today's society is so important because, like you said, the NHS, my husband also benefited from this. I've added him to the policy. And exactly the same. The waiting list was horrendous, but we managed to get in within a few weeks. So great benefit to have. The other thing I've heard about is rewarding employees who share schemes. Could you talk me through an example of one of these and how it works for employees?
So probably a classic example of this is the EMI scheme, which is the Enterprise Management Incentive. So here you're trying to reward long-term staff that you want to keep on. And the aim is that you're going to be rewarding them in maybe 3 or 5 years' time. So what you want to do is you set up a scheme and say, for example, I'll do this as like a numbers thing rather than just talk it through. An example is your shares at the time that you're going to set up the scheme are worth £10 a share. You say to your employee that in 3 years' time, they can buy those shares for maybe £9 a share. And what you're aiming to do is you're aiming to have goal congruence with your employees, because the idea is that they will help you increase the value of your company. So not only are you motivating them, they are also helping to increase the value of your company by maybe working harder than they would have done, because they get a benefit out of it in the long term. So you say £9 a share is what you're going to pay. You get 3 years down the road, they're worth £25 a share. Your employee may choose to not take them up, and it can just lapse, and there's no implication for them or for you apart from legal costs. But if they choose to go ahead with it, they'll be taxed on income tax on the difference between the £9 and the £10, the value they were at the original date. And then they will be charged capital gains tax, the difference between the £10 and the £25 now. So obviously, if they're a higher rate or additional rate taxpayer, being charged at capital gains tax rates for the difference between those two values is much more advantageous than paying them a higher salary and they just get charged income tax, at the whole lot. So it tends to be advantageous to them. Also, the company can get deductions from corporation tax from this as well. So the company benefits as well.
Yeah, and they'll pay that capital gains tax, I'm assuming, once they sell this to shares?
As long as they keep the shares, there won't be capital gains tax. So at the point they decide to sell those shares, and quite often they are given a route out via the scheme at the end of the day, because obviously at the end of the day they may want to have cash in their pocket. So the capital gains tax will only arise at the point they sell the shares.
Right, okay. So we covered a lot of things in there about different benefits and stuff. Is there anything extra to add about the benefits we've talked about, like the £150 the benefits of the staff events?
So I think probably with all the things we've discussed, we've just covered them very briefly. So if you're wanting to bring your company into any of these types of salary sacrifice schemes, employee share ownership, etc., it is best to consult with your accountant and just make sure that you're ticking all the boxes for all the rules. You're not going into something without knowing what the implications are if you don't get it right. So yes, always consult first.
Fab, thank you. So just to finish off, before we finish up for today, what is two or three points, takeaway points for today?
I think remembering that salary alone does not motivate staff, not in the long term. Actually understand what makes your staff tick, maybe. So the work-life balance, how important is that to them? Also, how important is feeling like they have a stake in the business and things like that. And also, what little things can you do that are just incremental wins, but are still wins?
Right. Thanks, Susie. Thank you for listening today, and I really hope you found it useful about rewarding your staff tax efficiently. It's just not all about salary. If you'd like a bit more advice, please feel free to contact us. But otherwise, please like, share and subscribe. Thank you.